Hello, everyone. Thank you very much. Welcome back. So we are discussing today corporate tax return guide, and this is our fourth webinar on the return guide. Topics are very long, and we wanted to discuss in detail, so we are segregating into different sections. And we are speaking today about the connected persons and related parties and transfer pricing requirement, in which cases you are liable to report the transaction in the return, in what type of transaction you are liable to report at the time of the submission of return. By the way, return we have already discussed. Now we are discussing the schedules. So let's start the discussion. As I mentioned, this is a fourth webinar on the corporate tax return. These are the webinars that we have already conducted. 85 webinars we have specifically conducted on the compliance related matters in the UAE. And introduction of the return guide, we are as usual discussing. In the introduction of the return guide, we have already discussed up to the section 15. Till this section, we have already discussed. This section we have already discussed. Today we are discussing related party transaction and connected person schedules. I was initially planning to discuss the losses as well, but there are deadlines, and today most of the people are taking off as well. By the way, Merry Christmas to everyone. So a lot of people are off as well today, and uh, so this is the reason that I have decided to discuss the related party transaction today. We will be discussing the tax losses schedules along with the participation exemption schedule in our coming webinar. So we will restrict ourselves today to the related party transaction and connected person schedules. These sections we have already spoken about. Last time, free zone, UA dividend schedule, foreign PE tax credit schedule, we have already spoken. Today we are discussing, as I mentioned, this section 16, related party and connected person. As usual, before discussing the guide issued by the FTA on the tax return, as usual, we'll be going through the basics. What is a related party? What is connected person? Why transfer pricing is important? What are the different transactions which are subject to transfer pricing? How to calculate the arm's length price? What are the different methods to calculate the arm's length price? What are the typical, what are the basically uh, tools which we are applying to calculate the arm's length price? After discussing all these things, it will be quite easy for us to go and address the questions given in the tax return guide. So, determination of taxable income, we have already spoken about this. Unrealized gain, we are starting with the accounting income, adjusting unrealized gain and loss, adjusting exempt income, adjusting reliefs, arriving at the non-deductible expenditures. Then after adjusting the non-deductible expenditure, we are passing the adjustment for the related party transaction. This is the relevant area out of the return today. Adjustment for the related party transaction, not an arm length. Not an arm length. If the transactions are already at the arm length, we are not liable to pass any adjustment. But if the transactions are already at the non-arm length price, then we need to adjust, because just look into this. You were sold goods to your related party, assuming 100 per kg, the market value is 120 per kg. So you assume you have sold only 1 kg. So difference of 20 needs to be adjusted, because you've already sold them at 100, market value is to 120. So your sales is short by 20. You need to increase your sale. This is some sort of adjustment. This is a difference in between the market value and difference in between the price that you have already charged to your related party or whatever you say to the connected person. This is adjustment. After making the adjustment, you will be arriving at your taxable income, all these things, then carry forward losses as well. So why transfer pricing is important? We have already discussed so many times this thing. The transfer pricing is important because companies, multinationals are usually shifting. I'm not asking every company is doing this, but usually they are planning like this. They are shifting their profits from the high tax jurisdiction to the low tax jurisdiction. And as per the OECD guideline, there is a tax revenue loss around $200 billion to 240 billion dollars annually. So to avoid this tax loss, since the revenue are being shifted from the high tax jurisdiction to the low tax jurisdiction, to control this thing, they brought the transfer pricing regulations. So whenever they are shifting their revenue, whenever they are shifting their profit from the high tax jurisdiction to the low tax jurisdiction, this overall concept is called BEPS, base, Ryan, and profit shifting. I'm writing it here. This is called BEPS, BEPS, base, Ryan, and profit shifting. This is a BEPS, base, Ryan, and profit shifting. And to control this BEPS, they brought the 15 action points of BEPS. And TP is basically some sort of, you can say, one of them, how to control the shifting of the profit from the high tax jurisdiction to the low tax jurisdiction. We have already discussed this example. In this example, the loan has been transferred, a loan has been given from the one entity to the other entity. Once the loan has been given from the one entity to the other entity at the price higher than the market value, so taxable profit has been reduced, and they had a tax saving of, their tax evaded of 100,000 dirham. Initially, tax was 1750. After this transaction, tax is 1650. One transaction has led a tax saving, a tax evasion for them 100,000 dirham. So this is the reason they are asking. No, you need to apply the transfer price. You need to charge the loan interest related party transaction at the market value. Why this is only applicable to the related parties? Because in the related parties you can manipulate, you can control the transaction, because if you're dealing with the third party, then no need to adjust the transactions, because third party, with the third party you will always be charging at the market value. Since you are you are in transaction with the related party, in the related party case, you can manipulate the price. This is asking, they are asking to adjust the price or apply the transfer pricing mechanism. Then application of the TP rules, this is the article 34, 35, 36, and 55. They said transaction at arm length while having a transaction with the following related party and connected person. Transaction with related party connected person can be domestic transaction, foreign transaction, maintain transfer pricing documentation as well. This is important. Usually, or in some jurisdiction, you can say they are asking, whenever you have a transaction with the related party across the border, then you need to apply the transfer pricing rules and regulation. But they are asking, okay, if you have a transaction with the related party within the UAE between the two taxable persons, still you need to apply the transfer pricing rules and regulations as well. So this is the related party. If you're dealing with the related party, if you're dealing with your connected person, you need to apply TP principles, TP benchmarking stability, TP rules, all these things you need to apply. What are your related party? We have already discussed. These are partners in the same unincorporated partnership, natural person having a fourth degree of kinship, natural person, juridical persons having a 50% shareholder or control with its related party, or persons with one juridical person, 50% shareholder control, person that is a PE, domestic PE, foreign PE, trustees, founders, settlers, beneficiary of the trust, foundation, or its related parties. So this is the related party, this definition that we have taken from the UAE corporate tax law. So if your partner, fourth degree of kinship, natural person and juridical person, two juridical persons, person and PE, trustees, founders, settlers, all these are related parties, and their related party will be considered your related party as well. Just keep in mind. Related party of related party will become your related party. That's why they said, or its related parties. Juridical person or its related party, or its related party. So just keep in mind, in this case this will not be applicable, fourth degree of kinship, this case not, but this case, the rest of the cases it will be applicable for the related party. Connected persons, they said connected persons are owners of the taxable person, related party of the owner or officer of director, director or officer. Now the director and officer definition is not given in the law. We will assume these are top tier leadership, like after the CEO there is a CFO, CAT, these are the basically officers after the top tier management, second tier management, you can say these are directors and officers. Owners and related party of the owners and director, these are your connected person. If you have any transaction with your connected person within the UAE or out of the UAE, what are the benefits you are giving to them? Just keep in mind, this is not only the monetary benefit that you are giving it to them, money that you are giving it to them, salary that you are giving it to them. Other than salary, if you are giving them any other benefits, we need to consider the value of those benefits as well, because this will be considered transaction with the connected person. So transactions on TP applicable. What are the transactions on which TP is applicable? It can be sale, purchase of the goods, provision and receipt of the various services, financial arrangement like you are giving loan, receiving loan, capital transaction, issue investment, transfer of equity, preference share, hybrid instrument. There can be a business restructuring as well, like buying and selling of the business to your related party, royalty and license fee, any intangible property that you are selling to your related party or buying from your related party. Tangible property like purchase, sale, transfer, lease of the tangible property like building, machinery that you are selling to your related party, that will be falling under it. Intra-group transaction, intra-group services. If there is a corporate entity, the corporate office, from the corporate office, the services are being delivered to their subsidiary, it will fall under the related party. So these are the various transactions. There can be other different types of transactions as well, but these are the usual transactions which are subject to transfer pricing rules and regulation if these transactions are being made with the related party or with the connected person. Then we discuss transfer pricing methods. These are the five given methods, and one more method has been given. Basically, law says other than these five methods as per the as given in the OECD guideline, if there is any other method which gives you the true and fair view of the transaction, you can apply in the Article 34, because Article 35 requires any other method. So GP method, distribution method, you can apply any other method that shows that the transaction has been executed at the market value. So these methods are their traditional recommended methods. These are the transactional methods, alternative methods. This cup method we already discussed in detail. This is a resale price method discussed in detail. Cost plus method, transactional net margin method, profit split method. This method, profit split method, is usually, as we discussed earlier, is applicable for highly complex transactions. This is applicable for the usually for the trading companies. Comparable uncontrolled price is the most suitable method if the comparable price is available into the market. Cost plus method is usually there people applying for the manufacturing costs or the services, like transactional net margin method is the alternative method you can apply as well. These are the various methods that we have already discussed. So when comparable exists, one transaction with the purchase from the related party. Basically, these are usually applicable to basically distribution business. You are buying from the related party and selling. Value addition and sale to related party. These are service transaction, linked activity, and these transaction. The profit split method is usually applicable for the highly complex transaction when there's a huge many processes are involved. Then we need to split the profit based upon their contributions, functions, and risk taken and assets utilized. Or any other method. Just keep in mind these are the various methods. Steps to apply, I'm going through or identify the transaction, select the appropriate transfer pricing, perform comparability analysis, select the transfer pricing method that can be applied. Just go through this. I'm not, these are the basically examples of comparable and controlled price. This is example of resale price method, example of cost plus method, example of transactional net margin method. It depends upon the NPI, net profit indicator. The NPI, yeah. NPI, net profit indicator. Okay. These are the example of transactional net margin method and profit split method. This is applicable at two stages, and contribution analysis, residual analysis. All these things we've already discussed in detail. So then comparables, you need to compare the marketing, after sales services, inventory management. This is usually a list for the intangible that you need to compare. This is a live scenario that whenever you are executing this transaction, you need to use any database, and various databases are available into the market. Whenever you are using any database, you need to start with the number of companies. Assuming in this example, we have started with 37 million companies. Then the Middle East, Africa, and Europe, only 10 million remaining was. This is the basically benchmarking, how we are usually doing the benchmarking in the various TP tools. We started with the 37 million transaction company, then we have got only eight which were the most similar function performance, similar functions. So these eights, based upon this, now the price that is being charged by these eights to the related parties, we need to charge the same price as well. So this is a TP benchmarking TP tool. These are various databases that are available. You can take Bloomberg is there, TP Catalyst, Arbase is there, TPI Capilina. These are the various around the 34 databases available. You can take any of the databases. Connector is there as well. So what best suits you, you can take it. You can apply the benchmarking based upon this. Documentation, if you are part of the group, part of the M&E group, and your overall revenue is more than 4.5 billion annually, then you are required to maintain the master file, local file due to the CBCR reporting as well. And otherwise, this just keep in mind, this is the or, this is not and. Either this is applicable, either this. If you are a local entity, your taxable person revenue more than 200 million or more. During a tax person, you have a transaction with the related party. You need to maintain the master file. You need to maintain the local file. These are the what includes in the master file, what includes in the local file. Then you need to do the CBCR country by country reporting as well if your revenue exceeding 3.5 billion in the financial year preceding the reporting financial year. So you need to do the CBCR reporting. These are the challenges of the TP. So this is about the TP. Now we can go through straightforward to the questions. Questions which has been given in the guide. Okay, I believe this is visible to everyone. Okay, related party schedule. We have already discussed the, as I discussed, we have already gone through the return. Now we are discussing the schedules. Whenever, whatever the amount that we're putting into the schedule, this amount will be pre-populated. This amount will be pre-populated into the return and amount will be adjusted into the return automatically. First of all, related party transaction schedule. The purpose of this transaction is disclose some of your high value transaction. Just keep in mind you are not liable to disclose every transaction. You are liable to disclose high value transaction. And who can fill these schedules? They said all the transaction with the all related parties if the value is more than 40 million. I'm repeating, all the transaction with all the related parties if the value is more than 40 million, then you are liable to fill this schedule. Otherwise you are not liable to fill this schedule. So whenever you are filling the schedule, you need to set the categories of the transaction like we already discussed in a PowerPoint presentation, that goods can be there, services can be there, loan can be there, intra-company transactions can be there. These transactions we need to assess the each category where the each value of the each category is more than 4 million, then we need to report, otherwise we will not need to report. So first of all, who is liable to fill this schedule? All the taxable persons who have a transaction with the related party. Value of all transaction with all related parties, if this is more than 40 million, you need to fill this schedule, otherwise you are not liable to fill this schedule. So whenever you are filling this schedule, you need to assess the each category of transaction where the category of the transaction exceeding more than 4 million, then you need to fill that, otherwise you are not liable to fill that. Dividend declared, it will not be part of this because dividend will be declared not in the separate section of the return. You are not liable to disclose it here. They are asking you need to include the gross income and expenditures. Figures are required for each related party in aggregate, but a type of the income and expenditure. Related party, each related party gross income and gross expenditure more than 40 million, more than 4 million, more than 40 million overall value, more than 4 million individual category value. Now look into the question. Name of the related party. We have already discussed who are the related parties. Partners, fourth degree of kinship, trustee, all category were discussed. This is exactly as per the definition of the law. Name of the related party, legal name of the related party. Okay, then their legal name of the related party, then transaction type. These are the various types that were discussed in the presentation. It can be goods, it can be services, it can be intellectual property, interest, assets, liability, other. These are the various categories. Definitely it will be given in the drop down list of the return. Tax residence, in which country you are resident, might be in the UAE, might be out of the UAE. The country in which jurisdiction the related party is, you need to disclose the tax residence of the related party as well. Corporate tax TRN where applicable. This is important. They said where this TRN is applicable. If you have a transaction up to the fourth degree of kinship with your cousins, with your uncle, definitely most of the cases they will not have the TRN. If they don't have the TRN, that's why they say this where this is applicable. Then gross income and expenses. This is the related party price. Whenever you are selling the goods, services, giving loan to your related party, what is the price that you are charged to them? This is the actual price that you have charged to them. Then which methods you have applied? We have discussed the methods in detail as well. So description of the other transfer pricing method. Description, why have you applied this method? You must have a justification as well. Then the arm length price. Now just look into this. This is the price that you have charged to them. This is the actual price that you have charged to them. This is the arm length price. So if this price, this price, this price, and this price, if this price is same, so there will not be any adjustment in the return. If this price is different, system will calculate the adjustment automatically, because this price is the actual price that you are charged to them. This is the market price. The difference between actual price and market price, the difference between the actual price and market price is the adjustment. Then you need to pass the adjustment. Taban, chalo baba. Okay. So this is a related party price, market price. How will you calculate the market price? By applying the transfer pricing methods. By applying the transfer pricing method, you will calculate the market price. Related party price is the price that you've actually charged. Difference between these two prices will be adjustment. So this is then tax adjustment will be calculated automatically. See, it will be calculated automatically. Difference between the figures in the 16.1.5, 16.1.8. 16.1.5, 16.1.8. Price that you charge and the market price. The difference between these two prices will be populated automatically and the return will be adjusted automatically. Connected person schedule. Now connected person, who are the connected persons? Owners, officers, a related party of the owners and officers. Do you need to report all the transaction with the connected person? The question is no. Because it has been given in the guide that where the total value of the transaction with the connected person is more than 500,000, then you need to report it, otherwise you are not liable to report it. I'm repeating. If you have, suppose there is a one CFO, you are giving them a salary of around, just keep in mind, around 400,000 annually. This is not their salary, but we can take an example, right? If we are giving them a salary of 400,000, then you are not liable to report it. But if you are giving a salary of at least 500,000 along with the benefits, this is not only monetary thing. They said payment or benefits. Where the payments are benefits, where the payments are benefits exceeds 500,000 per connected person together with this related party. Again, whatever you are giving to the connected person and whatever you are giving to the related party of the connected person on overall basis, if this is exceeding 500,000, suppose one company a giving salary plus benefits, and benefits are being enjoyed by the family of the officer. So whatever the benefits that are being enjoyed by the family of the officer, you need to disclose this as well. You need to consider while considering the total value of 500,000. So that's why for the connected person, if the value of the payments or benefits being paid to the connected person or being paid to the related party of the connected person, if this value exceeds 500,000, then you need to report it. Otherwise, you are not liable to report it in the return. Just keep in mind, important thing is, I'm repeating, I'm not asking that you are not liable to apply transfer pricing rules and regulations for transaction below 500,000 annually, or the transaction for the related person below, related parties below 4 million or below 40 million. Whatever are the transaction with the related parties, you need to apply transfer pricing rules and regulations. Whatever the transactions are with connected persons, you need to apply TP rules and regulations. But in the return, you need to disclose for the related party overall 40 million, individual 4 million. For the connected person, 500,000, including the payment and other benefits given to the connected person or benefits given to the related party of the connected person. But you need to apply TP on each and every transaction, and this disclosure is required. Threshold is only for the disclosure. This is not basically applying the TP. TP you need to apply as usual. So this is the same criteria, basically name of the connected person, what is the name, TRN number where applicable, payment or benefits given to them, description of the payments or benefits given to them, what are you giving it to them, the value of the payment or benefit provided by the taxable person to the connected person, value. Now this value should be actual value of the payment or benefit provided by the taxable person to the connected person. Enter the total amount of each type of payment or benefit provided in the tax period as recorded in the financial statement. If there is more than one payment made and benefit provided by the taxable person to the same connected person, report the amount of the respective payment and benefit separately. Just keep this in mind as well. Payment and benefits, you need to report it separately. In this regard, you will be able to add additional fields for each type of payment and benefits. You can add the fields. You need to report the payments and benefits separately. Whatever you are paying, this is the actual payment, actual benefits being given to the connected person. Then you need to assess the market value. Market value, again, when I'm asking you need to assess the market value, means you need to apply the transfer pricing benchmarking. You need to do the benchmarking. You need to assess the market price. You need to use the typically. You need to use the tools to assess what is the market price for the payment, what is the market price of the benefit that are being provided to the connected person. So difference between this, can you see, enter the value of the payment or benefit which have been made given if not dealing with the connected person. If these benefits, if these payments would have been made to the other than connected person, any third party, what would have been the value? Again, this is the arm length price. This is the actual price. This is a actual price payment. This is the arm length payment. So difference between actual and arm length, it will be adjustment. Adjustment for transaction with connected person. This is calculated automatically as the difference between the value reported in the field 16.2.5, 16.2.6. So this is between these two transactions. So this is simple, straightforward. TP, as we always spoke, as we always discussed, the most important and challenging thing is how to ascertain the market price. And for this purpose, we need to perform the transfer pricing benchmarking studies to ascertain the market price. So this is over from my side. In our coming webinar, we'll be discussing about the tax losses and participation exemption. Might we'll be discussing about the interest as well. It all depends upon the time. Today, as I mentioned, I have so many deadlines and this is off as well for so many regions. So this is the reason that we are kept our webinar very short as usually. Usually we have around 1 hour 45 minutes, but today we are going to close it in 30 minutes. So if you have any question, you are most welcome. Second most important thing I already discussed, I've already spoken to you in our coming previous webinar as well, that we have already launched calls.com and we are offering online training for IFRS. We are launching that as well very soon. We are charging very nominal price, and this nominal price is USD 30, USD 300 around for the 40-hour session. And after the training, we'll be issuing the training certificate as well. In my previous discussion, I have shown you the how can you join the calls.com. You can go at calls.com, KCOSS calls.com. On the calls.com, you can go straight forward. Here you can enroll yourself. Once you are clicking on enroll yourself, I am personally taking care of this carbo tax classes. Mia Farhan, he is taking care of the IFRS and internal auditing standards. These are being taken by Tausif, Mr. Tausif. These are Mia Farhan, a very experienced tutor. So I will try to contribute as well. Specifically, you can view their profiles. Here you can click and view their profile. This is a detail given for every person. Once you are clicking on enrolling yourself, you will be leading at the cases.com. This is a learning platform that in-house that were developed it. Again, this is a school registered there. Under the school, you can see the timetable. This is a timetable, 1 month and 17 days, total 43 hours class. This is the price. These are the topics given as well. Basically, on which day, which topic we'll be discussing, like scope, overview, and tax rates, exempt persons, taxable person registration, general rules, reliefs, allowable expenses, transfer pricing, We will have a session on the transfer pricing, then tax losses, tax grouping, qualifying free zone person. You can check the schedule exactly on the same day. These classes will be started, and you can enjoy the classes. As I mentioned, by the end of the training, you will be awarded training certificate as well. I'll request you that you can circulate in your circle, and I will request you to join by your side as well. The very nominal prices, very nominal prices. Honestly, these launching prices. A big ambition for this platform objective is to educate through systems and online. A lot of people are from different remote areas of the world. Might be they will not be afford the fee, might be they will not be able to travel. So this is the ambitions behind this, why we are going to teach through the online system. You are requested to join it. So if your questions are concerned, couple of questions are there, three questions are here. One is transaction like reimbursement of expenses paid will fall in related party. For example, rent a building paid one company, then cross charge proportionally to other related party without profit. Reimbursement of expenses, for sure, if you are giving it to the connected person, you are reimbursing the rent you are paying. It will be, but one party is paying, other party is reimbursing. Assuming there are two companies, one company is giving a rental apartment to the CEO, and this is being reimbursed by the main company. The transaction between these two companies, it will not be, because that is the reimbursement. But whatever the payment that is being made by the company that has originally provided the benefit to the CEO, that will be subject to TP. A reimbursement, uh, by the way, authorities can say, will you be providing this service to third party? No. If you're not providing the third party, so it will be considered short-term financing from one party to the other party, then it will be a subject to TP as well. Gift and giveaways in normal course of business is admissible expense or not? Gift and giveaways, it should not be allowed for tax purposes, very honestly. But in case entertainment will not be falling under the entertainment as well. So gift and giveaway should not be allowed for tax purposes. Thanks for this. Another question: when you apply small business relief, still transaction with the related party connected person needs to be arm's length. Why is this? There is no tax to be paid, so report needs to be made. No, whenever important thing is, if one company is providing any benefits to the connected person, or one company is making transaction with the small business, that company is shifting the profit from its own taxable profit to the other person. That company is subject to TP. But if the small business is giving, that is not applicable to the specifically small business. If the small business unit is giving anything to anyone, then objective is basically, are you shifting the profit here and there or not? If you are shifting the profit, you are reducing your taxable base. TP should be there principally. Any other question? One more, I think. Yeah, it's fine. Okay, guys, take care. Thank you very much. Merry Christmas once again to all of you, and have a lovely day. Thank you very much, and see you soon. Take care. Thank you. Bye bye.